So in this lesson, we're going to talk about continuation patterns, and we're going to map them out and look at larger continuation patterns as well as smaller ones on the lower time frames. Continuation patterns are generally consolidation patterns on a trend. So what you'll have is you'll generally have the run up where you have the momentum, it hits counterforce, and then eventually it consolidates. So you can get larger patterns. So right here, we can see in this Bitcoin bull trend, we see what's called an ascending triangle pattern right here. And the reason why it's ascending triangle is because you have a trend line that has a series of higher lows. So it's bullish trend line, but it hits multiple points of resistance. So it hit resistance right here, right here, right here, close to this area, and right here. And the tighter it gets, this is when it squeezes in and kind of consolidates. And what happens is you'll end up getting a lot of pressure building up, and then that's when you generally see momentum breakout, a high momentum breakout, until it hits the next major point of resistance. And so one thing we'll notice on this larger trend is we've had multiple points like this on this trend, right? We've had several ascending triangles, right? And so these are generally bullish. And the reason being is because the price is taking its time to establish itself at various price levels, right? And that's a huge difference than, let's say, a parabolic market like we've seen here in 2013, where the market just goes completely vertical, which is unsustainable. So this was a very unsustainable and unhealthy bull trend, and then it came crashing down. It was short-lived. I mean, this only lasted a month, where it literally shot up from, about $120 all the way up to, close to 1200, 1155. So that's almost a 10x, right? So that is not sustainable. So there's a difference between an unhealthy trend and a sustainable healthy trend. And sustainable healthy trends take their time. So for example, if you look at this larger bull trend that we've had over much of 2016, it's pretty much lasted a year, right? So you'd have this consolidation side and ascending triangle, a breakout, and then more consolidation, and then another breakout, and so on and so forth, right? So you have various different types of triangles. You could have an ascending triangle. Sometimes you can also create symmetrical triangles. Symmetrical triangles can generally be bullish, but they also tend to be neutral as well. So you could just wait for the breakout point. But then you can have these on much smaller time frames as well. So if we look at the last major breakout point here, we have a rally, we have some momentum happening with multiple consolidation patterns. So these are kind of like waves up. And so these patterns are called bull pennants. So you'll have this run up, an immediate kind of impulse, and then it hits counterforce and you have a correction and then consolidation where it just kind of squeezes tight. And usually, on the first one, it generally means that there are other ones that come after this. So you can see here, we just kind of have this bull pennant formation, and then it breaks out. And we have another pull right here. It pulls back, breaks out again, just kind of makes multiple waves to the upside, right? And if you were trend trading, then you could potentially buy the dip or buy the breakouts on any of these patterns, right? So you see how it's just kind of healthy, just shooting up multiple points of consolidation. But then instead of correcting and going sideways on each level up, we go parabolic at this point. This is what I call a parabolic blowout, where it just goes straight up vertical and then it crashes all the way down. And so you have the opposite. So in this case, you have bear flags, right? So it shoots straight down where you have a pull. It's just a continuation pattern, and then it bounces. And what a bear flag generally does is it retraces in the opposite direction of where it was initially heading. So You have that momentum, it hits a point of counterforce, and then retraces, and then continuation, a breakdown, and it does it again. Continuation. You see how it just kind of retraces away from the direction in which it's going, and then it breaks down again and does the same thing, right? So it doesn't necessarily always mean that it's going to continue on to its trajectory, but what it usually means is that during the first one, there's usually secondary or third moves, right? Oftentimes you'll see these markets going in three waves. There's one theory called the Elliott wave theory where it just talks about the markets going in waves of three. Now, that doesn't always happen, but it does happen more often than not. So we can see kind of three waves here. So generally speaking, if you're a trader and you were to, let's say, short or hedge on the very first pattern, right, the very first retracement, there's generally a higher probability that you're going to see multiple shakeouts. And then the same goes for this pattern right here. If you don't catch the breakout over on this pattern, then there's a dip buying opportunity right here as it consolidates and then moves up. So this made four waves up when you look at it, although this wave was much smaller. And so you know that after three waves, we're probably coming pretty close to the end of the trend. And usually when it goes vertical, it means that there's likely going to be a very, very strong counterforce. And the same when it goes vertical on the downside, it bounces to the downside. So that concludes this lesson on continuation patterns. In the next lesson, we're going to go into Fibonacci retracements and extensions.